No matter your age, your plan for retirement can start today. From the News Channel 5 Network, this is the Retirement Report.
Good morning. Welcome to the Retirement Report. I'm Hank Parrott, your host. All right, April 15th is in the rearview mirror. It is past. However, many of you may have found yourself having to stroke a pretty good-sized check to the IRS, right? Well, it's too late to do anything about 2013, of course, but now is the time. April 15th isn't the only time to think about taxes. In fact, now is the time to start thinking about tax strategies, okay? Strategies, ways to develop a plan to minimize and reduce those taxes for this year. You know, one of the things I've talked about many times is there are tax preparers, and their jobs are to make sure that they get the right numbers in the right boxes so you don't end up in that big box with the bars on the windows, right? But the thing about tax strategies, that's someone that's going to meet with you year-round. It's going to help you develop a tax strategy to minimize your taxes, whether we're talking individuals, whether we're talking retirees, how to minimize your taxes on that retirement income as you start pulling money out of your retirement accounts that's going to be fully taxable, right? How to minimize those taxes. Small business owners, this is a great time of year to be sitting down and trying to think of ways that you can help minimize your taxes for next year, as well as to plan for your retirement. You know, are you putting money aside for that? What kind of retirement plan do you have in place as well? You see, when it comes, this is the difference between a tax preparer and someone that does tax planning in addition. You know, Dr. Friday's with me today, my good friend, and you know, Dr. Friday and I have been working together with clients for many, many years in doing Roth conversions and doing other tax reduction strategies, and we're going to share some things with you today. You know, we were talking about this earlier in the week, you know, in preparing, and we were thinking, you know, we've got wealthy clients as well, all right? So whether you've got $100 million, $50 million, $10 million, or maybe $1 million or less. In fact, in some ways, for the ultra wealthy, if you know, tax planning, they pay high-priced people to do their tax planning to help them. We have those same strategies that we use for folks that maybe have just $1 million or less. All right. The thing about it is this: if you've got less, you can even afford to pay less in taxes. All right. If someone's paying 20 or 30% in taxes out, whether we're talking estate taxes, income taxes, or 40% or whatever, and they've got $100 million, is that going to affect their lifestyle? No, right? And yet they find ways to reduce it. But if you had to pay that and you're in that under $1 million, that could be a very significant issue for you and for your family. So we're going to show you how we can use those same strategies we use with wealthier clients with everyone, all right? And you can take advantage of that because we are going to make available to you a tax analysis today, all right? So tax day, as I said, is come and gone, but this thing of having to pay that check is going to linger for a time. So here's the question: what are you going to do about it? All right? Are you going to do the same thing year after year? Or is this the year that you determine you're going to get with some professionals like Dr. Friday and myself as an example to help develop a strategy to reduce your taxes? Okay, ways that you can minimize your taxes, learn how better to plan for taxes in retirement, how to limit taxes on your investments, strategies to prevent you from paying thousands, maybe even tens of thousands or $100,000 or more in penalties and taxes throughout your lifetime. And finally, strategies on how to roll over your retirement plans when you retire, and again, how to minimize taxes. So the choice is yours. You know, you can do absolutely nothing, just continue to needlessly overpay the government year after year after year, or call us right now. Call my office. There's the number on the screen, 376-5325, to get a free tax reduction analysis and potentially pay fewer taxes than ever before. So for the first, they got 5 callers. I'm going to expand it to 10 callers, and you'll be able to meet with Dr. Friday and myself together. 376-5325. Again, no charge to get your tax reduction analysis. Take advantage of it. All right.
Wow. 10 people we have to do this with?
10. I know.
Goodness gracious. He's just giving away my services.
There's two of us. It's double the fun. Right. You know, the only, and I was sharing some quotes earlier. This is the only difference. This is one of my favorites from Will Rogers. The only difference between death and taxes is that death doesn't get worse every time Congress meets. And I mention that because, in particular, over the last few years, there have been some pretty hefty tax increases that have come along.
Well, and they haven't met in this year to actually renew some of our tax changes. So that's something that's really getting a lot of us tax people really worried, because a lot of you that might itemize and things may find out 14 is not going to be the year you can take some of these deductions. So you may be limiting certain things.
Which they've done so many times, waiting till the absolute last minute makes it difficult.
We've had them happen all the way up into January the year before, you know, into the next year before we've even found out if something's been accepted. So it's really hard lately to truly, because planning means planning. How do we do that if we don't know if the tax law is going to be on the table or not? And if they wait till December 24th or January 5th, which is them in the past, nobody can plan at that point. You might be lucky enough to grasp a portion of it, but never really take advantage of it.
And this is, you know, one of the things when we're doing, and this is why meeting with your tax people during the year can be so important. And this is where those that do tax preparation, a lot of times they only work during the tax season. I mean, they literally are in business from January through the end of April, and then that's it. I don't know what they're doing. I don't know if they're retired or whatever, but
well, most of them don't make it a full profession, right? So they do that as a part-time, which I never understood, because probably 50% of my clients do extensions, which means I'm working till September, latest October 15th. So, you know, it goes a while.
And then the tax planning part, whether you're talking with small businesses and that. And here's one of the areas we put, you know, like I've met with people this week, and we, for some of the reasons that Dr. Friday was just alluding to, we've got times when we're saying, well, we're not sure exactly what this is going to look like, all right, how we're going to, you know, address it. We're going to have to wait and see. So we set up meetings. Well, we're going to get together in September again, and we're going to take a look at it at that point. And then we may meet again in October or November as we get closer to the end of the year if we still don't have guidance on certain of the tax changes. It can also come in with capital gains rates, and we're going to talk about that in a minute. In fact, let me show you. Let's get on the screen. We've got talking about taxes, what the tax rates are. All right, one of the things, you've got tax rates that range from 10% to 39.6%. Those are the tax brackets, all right? And as well as estate taxes, a lot of people don't even know about this one, right? A 40% tax on estate taxes, then penalty taxes 10 to 50%, and consumer taxes. Now, consumption taxes. Now, before we go into the consumption taxes, though, let me, you know, throw in here the limits, right?
Yes, there are certain limitations. Certain things have things.
Here we go. And those are from, in 2014, the marginal bracket for estates larger than $5,340,000. So if you've just got $5 million or less, this isn't going to be a concern for you. In Tennessee, however, the limit for 2014 is only $2 million. So it could affect more estates. The next part, now it's $2 million this year, it'll be $5 million next year, and then in 2016 it goes away, by the way. Distributions from most tax-deferred retirement plans, and this is the other part, and that's where these penalties come in. If you take money too early, prior to age 59.5 from a retirement account, you could be subject to a 10% tax penalty.
There are certain waivers, just so you know, there are, and that's when you really do need to meet with the tax person before you draw money, especially if you're 59.5 or younger than that age, because there are certain things that we can maybe get a tax waiver on those penalties.
And then the next part is there a 50% penalty if you wait too long, past age 70.5, and that's,
there you go. You can't really change that one.
It's huge, 50% penalty. All right, here's the other. Now, here are consumption taxes, and I put this one on the screen on my little board here because it was so many it wouldn't fit on your TV screen. And these consumption, I mean, the amount of tax dollars that are built into everything that we purchase, right? From gasoline, cigarette tax if you're one of those that smoke. There's all kind, all the sin taxes that go with other things like alcohol and what have you.
Income taxes, and then your personal tax, personal T-tax, Medicare tax, you name it.
Comcast, everything that you use, they find a way to tax.
Exactly.
I mean, there's so many taxes. So some of these we can't do anything about, consumption taxes being one of those. Income taxes, however, we can help you in reducing income taxes. And when it comes to estate taxes, truly there are so many strategies you can utilize that there's no reason you should be paying estate your estate would be subject to estate taxes or inheritance taxes with just a little bit of planning. I had a gentleman come in this week, and this is an example. Basically, I was able to show him how to save $2 million in estate taxes. That's $2 million that would have gone to the government that instead is going to stay with his family. All right, we're going to get into that strategy when we come back from this break. So join us here. We'll be right back on the Retirement Report.